Yeah, we'll just follow up from Wednesday. All right, so this was my trade. That was Wednesday. No, Thursday, I believe. The 11th. Yeah, Thursday. So I only traded 2 days of the week this week, and that was Thursday, and Friday. Because remember what I said. Right, about Wednesday. Hold on, let me close my window, guys. Hold on. Let's see. Wednesday's closure was pretty. It was 50-50 to me. Because yes, there's rejection wick to the downside, but it's still a pretty bullish candle, you know. Yo, shut, dude. Why are they doing this today? They've been quiet for like 2 weeks straight, and now they're wanting to like be loud. So yeah, hopefully they can chill out. But yeah, so it's like we had a pretty bullish closure, even though it was a rejection wick. So it's like 50-50 because in scenarios like this, right? Like for example here, right? For example that it's like this is. A lot of people will try selling based off of this candle alone, but of course through the gap through the week, that happened and we saw higher movement. So I wanted to see if the same thing would happen here, and we would actually finally take out 1.15, which is somewhere there. I was trying to see if we're gonna see that, but it looks like we want to get a small correction in before we fully expand to 1.15. So what I was trying to play off based off that day was pretty much the fact that this was pretty much the news from Wednesday, and I was on Zoom that night. I was like, I want to see if price is going to take out a previous high or if it's going to take out a previous low. So we obviously took out a previous high, break a structure. Right, took out a previous point of structure, and then all we were looking for was a pullback to then take out previous high, and I showed those markups yesterday, right here, right? So it was pretty much a break of structure and a consecutive higher low. So it was like we might see at least that high being taken out one more time, and that's what we want. So, right, there's 2 points of interest here. But the reason why I was pretty much waiting for this one, which is the main objective, for one, it's lower, buy lower, sell higher. Two, it's like, you know, we want as much of a discount, you know, to then catch a bigger move, bigger RR, and, you know, less trading. So what I was waiting for there is to see which one would occur. And potential PI number one, it was like it's either going to react from 50% of this candle because the open was already pretty much tapped. Well, not even tapped, but it just stayed around the open. So it was like, I don't want to play that anymore. It wouldn't make sense. So it was either that or it was the second POI, but the second POI had so much more confluence to it. This is just a M1 candle 50%. That's not, you know, like it can work, but there's not enough confluence there. Whereas here, it's like, you know, this red shaded area is the M5 SC. So from the M5 SC, we measure 50%, which is this line here. And not only that, but we get this, you know, these two lows that is taken out by a wick that tapped inefficiency and then gave reaction to the upside. So that we can imply that there is something inside that wick, and that matches exactly with M5 SC. So we came in, tapped price on the open, but I hesitated here. I hesitated because I still understand that there's a 5-minute SC. So even though we got a reaction to the upside, that reaction had no volume, right? You can see volume is declining, right? But we had a reaction to the upside. So all this is signifying to me is a potential just pullback for then continuation, which is exactly what happened. And then once we started seeing this final drop down, that's when the bearish volume was decreasing, and then that's when we tapped 50%, and pretty much I waited for the reaction. So we tapped it, closed here, and then gave a reaction to the upside. So I was like, oh, okay, that's the reaction I want. But to simplify, well, not simplify, but to go even more in depth, right? You could have easily gone after this candle here, because there's no volume in this candle, so it's just pretty much the last push down before an upside move, meaning that there's probably something in the seconds time frames. So from what we can see, 15 second, we see a accumulation schematic, right? Pre-supply, selling climax, automatic rally after selling climax, which is why I always want to wait for that reaction too, because from a Wyckoff perspective, that initial reaction could potentially just be a selling climax to automatic rally, which is why you need to wait and let it actually do something for you. So after the automatic rally, we got a secondary test, right? Secondary test failed to take out automatic rally, and then that led to taking out the secondary test and the selling climax. So that's our spring. And pretty much that reaction there is optimism shown, or pretty much the first time optimism is shown, and then that final pullback could have been to like a 5-second SC, you know, just to let's just say that I don't know fully, but it could have, especially because of the way this reacted. But obviously this test is this candle that I was looking into, right? So I didn't have to look at the 15-second to know that, because I know that the reaction given is giving me optimism that this pair can potentially move higher. So in reality, this ideology, this is going through my head by only seeing this, because I understand candle movement, right? But it's always good to reference it and to show you guys exactly why everything happens. So as you can see, spring test, right? We can now create equal highs with automatic rally, right? And not only that, but it's a break of structure here. So momentum rules, right? 1, 2, 3 candles to the upside, and 1, 2, 3, 4, 5, 6, 7, like 10 to downside. Momentum is shifting. So LPS, good entry. SOS, full break of structure, right? BU LPS came back to this wick here that potentially either, you know, filled an efficiency or tapped the 5-second SC, and then from there that's when we rocketed, right? But what I really like to just want to point out here was what happened after the test, right? The shift of momentum here that created equal highs, that's carrying a lot of volume. As you can see, it's above everything else. So that's showing true optimism that this wants to go higher and that this schematic can potentially play out, right? Because all we're doing, right, is playing based off probability, and that optimism showing itself inside an accumulation schematic is showing optimism to move higher, right? So from there, right, we target previous high. That was about 60 pips, and just like that, done for the day. But what sucks is, like, I didn't acknowledge the fact that, let's see, I didn't acknowledge that closure as soon as that target was met, right? Because if I acknowledge that, there's a good chance we could have caught this move. This entire time, I didn't realize that this entire time bullish volume was diminishing. I didn't acknowledge that. So this rally up to me was just a continuation higher, but obviously that didn't happen. Whereas this time around, pretty much what we can imply from here is this wick here took out liquidity, right? Wick took out liquidity here. So this candle to me pretty much mitigated whatever's in this candle. So now that candle is your point of interest, right? And now this final push, right, from the open, pushes up. Oh, from here, I'm sorry, the next candle pushes up and then pretty much drops all the way down, but we never come back to that open, right? So now that's a wick point of interest, right? And that's where price returned to, and fuck, like that would have been a sexy move. Somebody caught, is Carlos, who was it? Did Carlos catch that move? Who was it? Who caught that move? Somebody in the chat caught that move. Who was it? I forgot who was it. Yeah, you see? Like straight up, the fact that you saw that and acknowledged that, bro, like congratulations. That shows your growth. That shows that you actually understand what you're doing now. Obviously don't let that get to your head, but that just pretty much from there, that's how you learn how to play these moves. And then pretty much from there, this tanked, right? This tanked. Like, I hope you're still holding that, because that was honestly that's a sick trade, to be honest. Right, that's a sick trade. You see 107 pips by, you know, by 12 that time, by 12, which is the second to last H4 closure of the day. Yeah, you're right. Like, this entire thing, this is showing bullish movement, and pretty much like this has no reason to stop now, because we've now taken out full structure here. So now you just need a continuation forward, and that's the same thing for EURUSD. It's like you just want a continuation forward now, because structure has already shifted itself. We're pretty high in price, but what you have to understand is that price is still bullish. So whenever you see an excuse to buy, you take that buy, because all it takes is one small break of structure, and then now you play something else, and then that's your move, and then this is going to 1.15. But until then, you just follow bearish structure until it gives you a reason to go against bearish structure. Ah, bro. I wish you would have held that. That's not only is that a sick snipe, but that also allows you to practice patience. But yeah, it's like at this point now, it's broken, you know, pretty important levels of structure. So I really want to see where this goes from here. Right, same thing for GU. GU was actually the prettier one. I actually traded this outside of my hours when I caught the move that I caught. I traded it outside of my hours because it's a GBP pair, and I know GBPs move during London and New York. So that's the only reason why I did that. That's why I didn't trade EURUSD on Friday, right? Even though EURUSD actually gave a pretty good entry during trading hours. I wasn't even looking at it. So it's pretty much 50% here. Like right here, as you can see, right? Trading hours on Friday, right? Actually gave a push up, right? SC here, because this candle took out previous liquidity here, previous high, and that is now a reference point, 50% to the T. Right. Oh, I'm actually kind of sad I missed this. Right, that would have been like a 5 pip stop if you're playing off that time frame, which we obviously don't, but that's just as a reference. You see 20 to 1 just like that. Whereas if we would have zooming in here, it's like, yo, point of reference is rejected, right? Now that wick is point of entry, unless you want to wait, of course, right? And even though structure technically broke here, there was no pullback to premium, right? So this was one of those trades where it's like you're either in or you're not. Either way though, it's like you can easily anticipate this due to the fact that we had a very bullish run on unsupported volume, right? So you could have easily anticipated that. Even played this wick here, which is like a 3 pip wick. Yeah, 3 pip wick. So even if you would have played that there, right? First target, previous low, 9 to 1, and then that goes to 34 to 1, which is pretty cool. Just depending on when you want a TP, right? Even here, you could have TP'd here because we see strong bearish movement, But from here is when bearish volume is diminishing, right? Instability shown, reaction occurred. Right, same thing with GU. GU actually gave like a decent pullback, but I didn't even like attempt it because I was already in from the high. Pretty much this would have been your pullback during session around 8:30. And the only reference point would have been this wick here, but that would have been tricky to catch. That would have been very, very hard to catch. Whereas the one before was actually a lot easier to catch, because when I woke up, I woke up at 5 in the morning that day, and we were like around here. So once I saw this bearish move down, I was like, oh, okay, yeah, this is gonna be bearish today, because we had 2 bearish daily closures, and we just had a momentum shift to the downside here. So now I just want to catch that pullback. So price came back to that 5-minute SC here. Right, 5-minute SC, but you know we're not going to take our trade based off of that 5-minute SC. So we see what happens, right? We see bullish run. We see unsupported volume, right? Just until that, you know, that indecision here. Pretty much you see volume starting to decline. And then we get a reaction, right? Literally the same thing that's happening on the 15-minute happened here on the 1-minute, right? The bearish sign here, which is the push down. And then the recovery is very, very slow. And we met inefficiency fill there. And there was actually a 5-second SC there. I'm pretty sure I showed it in one of the markups. Did I? I didn't show it. I think it was here. Oh, I didn't show the 5 seconds. So there was a 5-second candle inside of here, and that literally got the entire zone there. But yeah, but this is more so a better reference point for here for that candle, right? As you can see, candle took out liquidity, 15-second, and then price just came back, tapped that, and died. Right, and then from there, boom, melt. Right, if you would have caught that 5-second entry, then that's like a 60-1 right there. That's insane. Obviously, I didn't get that. I got this one. But yeah, I mean, I think that's the rant for today. Went over both pairs. It's looking like DXY wants to recover finally after fucking, I think it's been like 3 weeks of bearish movement. Nah, 2 weeks. No, it's been like 3, almost a month. So I want to see a pullback. Hopefully we can come back, hopefully to a structure point. I really hope we can come back to a structure point, because in terms of fib rules, it's like this previous structure point is already at a premium. So honestly, anywhere in premium, I want to see this come back to. Not saying it has to though, so just be careful about that, because this can literally just meet a continuation here in this candle and instantly melt and take out previous low. So I just want to see how Monday and Tuesday's closures are, preferably especially Mondays, just to see what direction it wants to take for the week. Because that's scary. That's a scary bullish closure, which is why that EU sell would have been optimal to hold. Easy. Same for UCAD. I know there's a couple of you in UCAD. I know somebody bought from the bottom, and that's already like 300 pips, I believe. Yeah, like 250. Nice. Very, very nice. Yeah, pay more attention to volume. So here's the thing about volume. People will tell you like the feed itself, like the volume feed, the order liquidity feed isn't the same as it is for every other liquidity provider, which is fine. That's okay, because we don't need to know exactly how many orders are for particularly buys or sells in that market. All we need to know is the proportion, right? Do you get what I mean by proportion? Like, let me pull up a chart. like volume diminishment, volumes instability, you know, all of that is it's all like it's all proportion, right? Do y'all understand what I mean by proportion? Need to find a good one with volume. It could be. I'm just not. I just don't trade futures. I don't trade futures at all. So by proportions, I mean know the proportion between the X amount of bearish volume in comparison to the amount of bullish volume. So the proportion here is like there is a decline in bullish volume here, but price is moving up. So it doesn't make sense. Right? Hopefully I'm not confusing you with proportion. I shouldn't use proportion. Instability just is based off of pretty much I want to say divergence, but I don't want to call it divergence because I don't know, it just divergence just doesn't sound correct. But it's like volume is showing one thing but price is showing another. That means it doesn't make sense, meaning something else, meaning that's either a fake move and we'll see the opposite direction come very soon, or we can see instant volume just come out of nowhere. But that doesn't really happen unless there's a news event or something like that, you know? Exactly. So that's pretty much what I mean by proportion. Volume has to be proportionate to price action. If they're uneven, then it won't make sense, and the move won't make sense, and you'll probably catch an L because of it. Or it'll move in the opposite direction because of it. Right? Making sense. Right? Using logic. Not supported. Yeah, pretty much. Not supported. See, y'all get what I mean. Y'all get what I mean. Yeah, hopefully. Yeah, hold on, that's really loud. Of course, they want to turn on the fucking vacuum when I'm doing this call. Yeah, hopefully it's not too loud. I'm gonna just get closer to the speaker because I'm pretty much done. Pretty much done talking. Let's see. But yeah, I mean, do you guys need anything? I'm pretty much done for today. What do you think of US30? Looks like it wants to die, bro. Look at the weekly. I haven't even looked at it, but I already know the weekly is nasty. Equities is 30. Yeah. Yeah, you see, it's very, very bearish. Cool thing about this one, right, I saw a couple of you point this out to the T there. Would you see it as a corrective move? It could be, because look, it could be. There's nothing supporting that bullish move up. And structure shifted already. Right, the thing about this is like, look at when it moves. Right, top there, look at when it moves. It's random at times, right? Like it's all during New York, but it isn't during my optimal time of trading. See, like this move was at 9 p.m. at night for me. It's like, what, you know? Right, this move here happened during New York, but it was after my optimal trading hours. Which is why I need to show you guys that behavior video, but I want to get the GA video out hopefully this weekend. Then I'm gonna get journals done, and then I need to start preparing for that behaviors video. That's gonna be low-key a pain. But yeah, I think we're good for tonight, guys. I mean, for today, guys. Yeah, guys. Let me stop the recording.